Well, look, I mean, as a management team, unfortunately, we can't directly impact the share price. We sort of look at the share price, but we take a view to say, let's do what we can do operationally, financially, socially, everything else to make sure our business is robust and sustainable. And the share price over time will take care of itself. So, in terms of shareholder value, what does it mean? As I've said, we need to demonstrate we run our assets. That translates into profits. That hopefully will translate into dividends again in the next couple of years. We've been in the past. We've been one of the leading dividend yielding gold stocks in the world, and a number of our investors want to see us go back to dividends. So that's key for us. And then hopefully the price takes care of itself.
Well, I mean, okay, we'll talk about dividends. You have been dividend paying previously. I don't know what that's looked recently or what the plans are in the future, but that's got to be very attractive to new investors coming in if you're talking that language. But what's the reality of that in terms of timing?
Well, the reality is that I can't make a commitment, but what we have said to the market is that we would like to resume our dividends as soon as we possibly can. It's unlikely to be this year. So we suspended the dividend last year as a result of the major construction capital we were putting into Elikhulu, but also as a result of having to close the underground operations at Evander. So I don't think any of the shareholders expected a dividend. As I've said, this year we're still very highly geared, again, as a result of constructing Elikhulu. But, if the markets cooperate, there's no reason why we can't relook at a dividend in the near future. And that's really the guidance that we've given. And I think, I can't say much more other than to say that we recognize that certainly for a number of our shareholders and investors, the dividend is very important. And hence we need to give it the focus that it deserves.
Okay. So talking of shareholders, you said 35% of people investors are non-South African. That leaves a large South African contingent. Is that mainly institutional or retail? How does that break down?
It's our shares are actually quite tightly held in South Africa. Yeah. So the shareholders are mostly institutional.
Right.
The largest being an institution by the name of Alan Gray. And we have Investec, we have Coronation, we have PIC, which is the government pension fund, effectively.
Right.
So we have a number of blue chip and very well regarded institutions as anchor shareholders in this country.
And on AIM, what's the similar sort of split, is it?
There's quite a big retail component on AIM, but then there are also a number of institutions that are quite prominent, and we've had good relationships with these institutions for a long time.
Right, you've had good relations, but what are they talking to you about on those monthly shareholder catch-up phone calls? What are their concerns? What's keeping them awake at night? What do they want to see from you?
Well, I think most shareholders, number one, want to see that we continue to operate successfully in terms of our existing business. So that's key. Certainly the non-South Africans would have questions around the operating environment in South Africa, which we, I believe, address to the extent that we can. And then, most shareholders, given what's happened in the industry in the past in terms of capital allocation, this is a big focus for shareholders. So what that means, don't go and do a stupid transaction. Don't go and overpay for another asset. And that's a big concern of shareholders. Again, as I've said, rightly so, I believe, because of the lack of capital discipline in the industry in the past. So we keep having to reassure shareholders that we're not going to go out and do something that's going to destroy value. And we're very cognizant of the requirements of shareholders in that regard. I do think if you look at how we've allocated capital recently, and it's a key focus of ours, I think we've been very responsible. So, you can talk about a number of metrics when you look at sort of a measurement of successful capital deployment, whether it be IRR or return on investment, etc. Let's keep it simple. Let's call it payback. It's a key measure of ours. Elikhulu, we forecast that it will pay itself back in less than 4 years or 4 years. And then all our other tailings projects in the gold space have been very successful from a payback perspective, and obviously then also from a IRR perspective, or whatever other measure you wanna look at.
Right. So how much cash are you sitting on at the moment?
Well, we're in a net debt position as a result of Elikhulu.
Right.
Sort of pretty much at peak debt because of the fact that we've sort of in the months of April and May, we have actually made the last material payments on the construction side of Elikhulu. So we're pretty much at peak debt at the moment, about $130 million. But as I've said, we expect that number to come down quite dramatically now, given that we're at full production at Elikhulu.
Right. Okay. And so, what was the nature of that? Was it just local finance debt?
Yes. Well, it's a consortium of the big. It's effectively three of the big four South African banks are in our consortium. So it's Rand Merchant Bank, First Rand, Absa used to be part of Barclays, and also Nedbank.
Right. Okay. So, and terms you're obviously happy with. Okay. And I guess your hope is that obviously that's going to unlock value for your payback. It'll unlock value. Longer life of mine or production for you. So that's fine. So, can I ask, what would your message be to new investors looking at you? If you just say, look, we're a producer. We're very aware of the issues that we have, and we're addressing those. This is a good investment. I mean, what would you say? What would your message be?
I've come to the conclusion after many years in gold mining is there's a reason why gold is so expensive. It's because it's quite difficult to extract profitably. So, in putting it simply, we have a well-established track record. Our longest-running asset having run for 130 years. We have a well-established track record of extracting gold profitably. The fact that we now do half of our gold out of surface tailings, which is safe, really low cost, certainly differentiates us from the rest of the sector. So if you're looking for a long-term, profitable gold play with significant growth upside, I believe Pan African is a stock that you need to look at.